last fall when people were still expecting mortgage rates to be falling this year, it was common to assume that rates would be in the low sixes or fives by now. And people were at the time asking me if lower rates would bring a flood of inventory. The suspicion was that there were a bunch of sellers who were waiting to sell. Once rates fell, these sellers would come rushing back into the real estate market and we'd finally see inventory grow. The implicit fear is that we'd maybe see too many sellers, too much inventory, and that lower mortgage rates would actually therefore cause home prices to fall. My response at the time was actually the opposite. The only way inventory would grow in 2024 is if mortgage rates climbed. At the time last autumn, this was kind of a shocking statement because, first of all, everyone assumed that rates would be coming down by now. Second, because people think of home sellers being locked in by high interest rates, what homeowner is going to give up a 3% mortgage to get a new home with a 7% mortgage? So the thinking goes, if rising rates prevent sellers and restrict available inventory, then falling rates must lead to more sellers and more inventory of homes on the market. But the evidence is the opposite. The inventory has been rising for 2 years, just as mortgage rates have been rising for 2 years. Rates are higher than last year, and inventory is now 21% greater than a year ago. At this time in 2022, inventory was already starting to build as mortgage rates were already starting to rise. Available inventory of homes on the market is climbing now and will continue to climb until we're finally in an environment of declining interest rates. This is related to the Fed starting to cut the short-term rates. It is related to inflation continuing to recede and probably of unemployment to starting finally to rise. The economy has remained surprisingly strong, and this transition has taken a lot longer to arrive than anyone expected. So we are in a rising inventory world. What we want to watch for in the data is how quickly demand slows relative to supply. Are there signals of a big flood of sellers? For example, do investors start unloading properties? Are there signals in the price data that say demand is weak enough that home prices might fall in 2024? So that's what we're watching for. And at Altos Research, we track every home for sale in the country every week. This market changes way too quickly to wait a month for the latest data. We track all the pricing, all the supply and demand, all the sales pendings, all the changes in that data so that you can see it immediately as it happens. I'm Mike Simonsen. I'm the founder of Altos Research, and let's take a look at the details of the U.S. real estate market for the week of March 11, 2024. There are now just over 500,000 single-family homes on the market in the U.S. That's up 0.5% from last week and is now 21% more than a year ago. There are 100,000 more single-family homes on the market now than there were in March of last year. And that's what a year of higher mortgage rates brings. So until mortgage rates fall from here, then by July, we project we could have 40% more homes on the market than a year ago. If rates fall, let's say into the mid or low sixes, then demand will pick up faster than supply, and this inventory trend will slow or recede. So what we're looking at here is the last decade of inventory in the U.S. You can see a few things. First, most of the last decade, inventory would fall each year. When mortgage rates are low, we want to own more real estate, and therefore each year there were fewer and fewer resellers. So you can see the late summer peak in each year's inventory cycle here was lower than the year prior. Then in the last 2 years, rates have risen dramatically and inventory has risen dramatically. That's the red shaded zone at the right end of the chart here. You can also see as a country, available inventory of unsold homes on the market is more than last year, but still 30% fewer than in, say, March of 2020, just a couple of weeks before the pandemic shut everything down. So we have 30% fewer homes on the market now nationally. And as we started 2020, we were already at record few homes on the market. So as a country, the market would require several more years of elevated mortgage rates to get back to the old levels of inventory. Now, that being said, there are dramatic differences in how local markets are behaving right now. The Gulf markets from like Southwest Florida over across to Louisiana. I'm in New Orleans today speaking at a conference, and it's true here too, and then over to Texas. All have inventory levels that are now mostly back to the pre-pandemic levels of 2019 or higher. So whereas in the Northeast and parts of the Midwest, inventory is only just now starting to grow off the pandemic lows. In our webinar next Thursday, March 21 at 10 a.m. Pacific, we'll spend extra time digging into these local markets. We'll look at questions like, are some of these markets expecting prices to fall? What happens if home prices fall in Fort Myers but rise in Boston this year? So that's next Thursday, March 21 at 10 a.m. Pacific. That'll be our full hour-long webinar. There's a link to register for that in the description below, so click that to reserve your space. These are limited to 1,000 attendees, and we get way more than that each month who want to join. So click that in the link in the description to reserve your space now. Okay, so then to watch whether supply and demand get out of balance with higher mortgage rates, we want to keep an eye on the new listings volume this spring as well. It's not just the total inventory. So there are 59,000 new listings unsold this week. That's 15% growth over the pace of 2023, 15% growth. There were an additional 16,000 immediate sales this week. So in total, 4% more sellers this year when you include all those that are already in contract and not adding to the active inventory. So it's not a flood, it's just a nice steady increase. There are more sellers, generally allow for more sales in 2024. So in this chart, each line is a year. The dark red line is this year, and the light red line is last year's curve. The gray lines are previous years. So notice how we're slowly getting more sellers and more new listings to add to inventory this year. Also notice that this year's line is still pretty low, meaning we have fewer sellers each week than in the years just before the pandemic. So it's growing, but it's not a lot yet. In fact, in 2020, in those last few weeks before the pandemic hit, there were 80,000 new listings in the first week of March. Last year, there were 51,000. So this year, we're inching up to 59,000. So expect this number to keep rising. As rates are higher, we are slowly getting back to the normal levels of sellers. Everyone has a 3% mortgage. Very few people want to sell. But now that we are 2 years past that 3% mortgage, 8 to 10 million Americans are not locked in with that 3% mortgage. Those are people who bought homes in the last 2 years. So the longer the market stays with higher mortgage rates, the fewer people are locked in. If mortgage rates fall this year, you could see this new listings number accelerate a little bit, but demand is going to boost more than supply, so the total inventory will fall. Again, this is regional, and we'll have time to look at the regions in the webinar next Thursday, March 21. So homes are more expensive than they were a year ago. Payments are more expensive too. Inventory is rising. Are there signals that home prices might start falling? One of my favorite leading indicators for future home sales prices is the price reductions data. 30.5% of the homes on the market have taken a price cut now. That's a normal level for this time of year, and it's basically unchanged from a week ago. So in this chart, each line is a year. It's not uncommon for price cuts to start inching up this time of year. Homes that get listed after the new year and haven't seen offers yet, they start to cut their prices. Generally, it's just a few now. Later in the year, price cuts become more common. And here's what the price reductions data tells us compared to last year. Notice how this year's dark line at the left end of the chart here is just about to start to move ahead, move above last year. Last year, there was still a lot more buyer momentum than sellers. This buyer momentum at the time in March led to 5% home price appreciation for the year 2023. So we could see it really already in March of last year. With inventory up and demand down now, there's significantly less upward pressure on home prices now than a year ago. So 2023 finished the year with 5% home price gains. Home price appreciation for 2024 is looking much flatter, closer to 0% change in home prices for the year, unless mortgage rates drop soon. So there isn't anything in the price reductions data that says home prices are crashing. Even in places like Southwest Florida, which is arguably the weakest housing market in the country right now, price reductions are up and climbing, but they are not remarkably high. Again, join us Thursday, March 21 for details here. The median price of single-family homes in the U.S. is now $432,000. That's up 0.5% from last week and just over 1% higher than a year ago. This is the asking price for all the homes on the market in the U.S. The dark red line here, the dark line here at the right end of the chart, normally you'd expect home prices to be rising in the spring. The prices have been inching up, but there just isn't enough buyer demand to push home prices really higher. And this is the highest demand point of the year. So just like we mentioned in the price reductions data, the signal is fairly weak for home sales price appreciation in 2024. The bright red line here helps us see that there isn't a lot of downward pressure on home prices. So prices aren't falling, even though affordability is at these generational lows. The median price of the newly listed cohort this week, that's the bright red line, is $420,000. That's up a healthy 4% over last week and 5% over last year. So this tells us that home sellers are aware of enough buyer demand to price the new listings without taking big discounts. It's encouraging. It's an encouraging signal for confidence in home prices for the peak season that's now upon us. But let's close today with homes that are in contract. We look at the contracts pending because these are the home sales that will close in March and April. So we already know where prices are, where sales prices are, and where the sales will complete over the next few months. There are 334,000 single-family homes in contract right now. That's a fraction lower than last week, though the sales are generally climbing for the spring. There were 65,000 new contracts started, which is up almost 4% from a week ago and is about 1.5% more than a year ago. There are 3% more homes in contract now than last year at this time. So that means slight sales growth over last year. The pace of sales growth has slowed since January, when at that time I was expecting 10 to 15% growth in home sales for 2024, but mortgage rates over 7 have definitely slowed the growth of home sales. Rates over 7 have slowed the growth in home prices too. So the median price of all the homes in contract right now is $389,000. That's unchanged from a week ago and 4% higher than a year ago. In this chart, each line is a year, and so you can see that this year's prices are above last year. The dark line is this year, and at the left end of the chart here, but the spread is compressing just a bit. So last year at home sales at this time were starting to actually come in below 2022. Those were corrections down that started in October, but the closed sales that were starting to come in were in March and April, May last year that were below. So I shaded that area gray on this chart. But prices are up 4% this year but because prices are not climbing, that spread is getting thinner. So we don't have signals of prices dropping, but we can watch the growth starting to recede. So this is another signal that points to flatter home price appreciation in 2024 than we had in 23. So these are pivotal weeks for the housing market. There are home buyers and sellers sitting on the sidelines waiting for conditions to improve. So if buyers and sellers, potential buyers and sellers, knew the data, would they act differently? So if you need to communicate to help buyers and sellers see the actual data, you should join us at Altos Research. Go to altosresearch.com, book a free consult with our team. We'll help you know how to talk about the data, about your local market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started.